All new at 4, a roller coaster ride on Wall Street today, to say the very least. At one point, the Dow dropped 1,000 points, but stocks recovered and the Dow actually closed up slightly. You can see it right there. Today's performance is the latest day of negative territory and wild swings for the market. So why does this keep happening? Joining us to break it all down is Leah Hartman, the chair of Account Finance and Marketing Department at the University of New Haven. Leah, thank you so much for being with us.
Thanks for having me, Erin.
So I was in the middle of eating lunch today and was looking and could not believe it. Like you said, what a day. What do you think is behind what we've been seeing, especially the wild swing we saw today?
I know, right? So if we would have been on at 2:00 in the afternoon, what I would have been saying would have flipped around. So I do think a big part of it is the concern about Ukraine and the possibility of the U.S. deploying troops. So that notice of standby, I think, was very scary for some folks. We have other layers of concern. The Fed is heading into a two-day meeting. We are expecting them to come forward with some news about hiking rates. That's been in the marketplace, but when you start to converge the concerns of Powell saying last week that inflation was of grave concern, now we have the Fed meeting, which was planned, but you lump that in with geopolitical uncertainty. I think the markets are just looking for a safe place to land and are crazy.
There obviously is a lot of turmoil going on right now, like you mentioned, between inflation rates and the price of goods. We have COVID going on. We have the situation in Ukraine. So definitely things are spiraling out of control, you could say. What is the best advice for people when things like this happen? Is it just stay the course and not panic?
So always be on top of what you own. No one's going to take care of your money better than you. So pay attention. Do your homework, whether that's a homework for selecting a financial advisor or do your homework and selecting an ETF for a mutual fund or an individual stock. Do your homework and have confidence. This volatility is likely to continue. I mean, one day here, right, over 1,100 down and then ending the day in a positive note. So if you're confident in your choices, that you have done your homework, that you are not playing a popular name because, oh, my neighbor bought it and made a lot of money already, I mean, that is not sound investing advice. Just be prudent.
What do you think it's going to take for the volatility to eventually subside and these swings and insecurity over what to do? When do you think that will stop?
Oh, my crystal ball needs a little shining here, Erin. So I think we have some news coming. We have a pretty big earnings week kicking off this week. We have some comments about GDP growth looking backward and then expectations looking forward. That's coming out this week as well. Unfortunately, some of the bigger earnings releases have guided down in their 2022 guidance. That did not help the roller coaster of the market today. And so that cautionary commentary, I think, is really about the first half of 2022. Supply chain issues are slowly getting resolved, and then Omicron happens. So everyone is struggling to have employers show up, whether they're home because they're ill or whether they're quitting because they're looking for another job. That's exacerbated the problem or certainly lengthened that time. So be prepared. This first quarter is still going to stay rocky. Again, the best advice I can give is do your homework, hang in there, and if you're uncomfortable with a holding, then you shouldn't be in that stock.
All right, hang in there is good advice for everything these days. A lot of good information there. Leah Hartman with the University of New Haven. Thank you so much.
My pleasure.